Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. Yes, your eyes do not fool you. This is your daily financial news. Normally, folks, with the daily financial news, I like to use a whiteboard. I use the whiteboard kind of as a outline to make sure I don't miss anything. But unfortunately, today my ear pods or earphones did not charge, so they are out of battery. So instead, we're going to go with plan B and do the daily financial news without any whiteboard. So thank you very much for being a part of this. A couple of things to really mention first. Stay tuned to the end. Please stay tuned to the end. I am going to talk about the November 12th event, the highs and lows of trying to put something together. I do believe it ended on a super high note, but please stay to the end because I know everyone's not interested in the November 12th event. So we will do the daily financial news first and then close with all of the drama. So again, I have my page fulls of notes. So as we go through this, a couple of things. First and foremost, where are the jobs, right? The jobs number yesterday from memory was 263,000, slightly above, unemployment 3.5, wage inflation 5%. Enough to take down the market. This is the Fed's going to look at those numbers as further evidence that they are not in control. And I don't know about you, but when you have core inflation above 6, you have headline above 8, and you have a funds rate at 3, what do you expect? So as we've been talking about on this channel for months now, I expect 75 November 2nd, 50 December 14th, I think, and then probably another quarter to start off the new year, but we shall see very quickly. So where are the jobs? Leisure and hospitality, 83,000 jobs. This makes sense to me. You and I have talked about the K-shaped summer, travel, all of that. We still have a lot of people spending money on experiences, right? We got enough cardboard boxes, and now we're spending on experiences. Healthcare, 75,000. That's in a month. That's some good growth, I would think. Professional services, 46, manufacturing, 22, and construction, 19. For me, it's going to be very interesting to watch construction. Is multifamily going to pick up where residential goes down? Is remodeling going to pick up where building is down? I don't know. But if you were to ask me, that was probably the most surprising number. Going into this number, I would have assumed that construction would have been down. Now, there were some areas that had loss of jobs. Some of this could be seasonality, but losses nonetheless. Retail, down 1,000. Transportation, down 8,000. Financial services, 8,000. And the big loss, probably okay with this, frankly. I don't know about you, but I'm generally speaking okay with this loss. The government, right? That big bucket, which I assume is federal, state, city, municipality, all of that, down 25,000. So we had, again, growth over 250,000. We have an average, I think, this year of over 300,000. The economy is doing okay. I don't think it will be doing okay longer term, but yeah, we've got some pain. But if you're on this channel, you know it's coming. You are prepared. We've been talking for 6 months about making sure you have that reserve, making sure you get close to revenue, protect your job, and most importantly, everything that one rental at a time is do the work. Get around positive people, right? There's nothing that changes over the last 3 years of this channel into a recession. As Greg Dickerson says, good times never last, bad times never last. Well, we've been together for some pretty good times. Now it's time to stay together for some pretty bad times, and that's where opportunities are. So I look forward to all of us really toughening up and realizing that the opportunities are out there. Jim Cramer is out, one of the classic talking heads. I love that there's a reverse ETF on Jim Cramer. I thought that was hilarious. Whoever created that, you're a genius. But Jim Cramer yesterday, talking about the jobs number, basically said the economy is a runaway train. The jobs number just broke through the Fed's blockade. It is time to blow up the tracks. That obviously gets quoted, retweeted, whatever you want to call it. But basically, what Jim is saying is something that, frankly, I agree with. And I agree with because I think it's happening, not because I think it's right or fair or any of that. I live in a world where the dominoes are falling, and it's our job to react. Arguing if they're fair or right is a mental exercise I choose not to focus on. The Fed's going to cause pain, and you and I should be looking every Thursday morning at the unemployment numbers. That's going to be our first and earliest indicator that the Fed could back off. I think the battle lines are really, really clear, in my opinion, and it's just an opinion. The Fed pivot or the Fed pause, right? For me, it's a Fed pause. Will it be after December 14th when the Fed funds rate is 4.25, 4.5? Or will it be in Q1 when Fed funds is maybe 5%? This is where I see the battle lines. It is fair to say that there are more billionaires going on TV, CNBC, Bloomberg, MSNBC, CNN, all of the channels that love to cater to billionaires, complaining about the financial system cracks, complaining about this, complaining about that. Lots of these individuals, you have to realize, are in the real estate industry. They're in the financial market. And dare I say, the Fed is causing them pain on purpose. Now, I don't think any of us sit here today listening or speaking to this that hope a big black swan a la UK pension funds happens here or any else in the world. We need to get rid of the Fed put. And my belief is that Jerome Powell is getting rid of the Fed put. He is basically telling this billionaires F off. I'm in charge, not you. For the last 40 years, the Wall Street money has been in charge, and they could cause a Fed pivot all by themselves. So, yeah, it is an interesting time to watch. So we shall see what's going on. Next week, we do start the earnings seasons. Earnings come out starting on Wednesday with PepsiCo. PepsiCo will be very interesting because they're not only beverage, but they're also snacks, right? Frito-Lay, I believe they bought years ago. So what's going on with the consumer? What's staying home? What's going on in events? All of that. Thursday, we're going to get Delta Airlines, Domino's Pizza, and BlackRock. I think Domino's Pizza is going to be interesting to me because I don't know if you go back and look at their numbers. They have some tough compares, right? Domino's last year, this quarter, couldn't do any wrong, right? Pizzas was the answer. So I think Domino's is going to have a very tough compare. I think a lot of stay-at-home stocks, a lot of pandemic stocks, which I would throw Domino's Pizza in, are going to have tough yearly compares. Much like AMD, right? AMD had a tough compare, and now they missed by $1 billion. So, we shall see. And then Friday, the big financial stocks start. JP Morgan, Wells Fargo, Morgan Stanley. It's going to be interesting to watch the financials. Are they reserving for bad debt? If so, what bad debt? Is it mortgage? Is it credit card? Is it small business? What are they reserving for? What was going on with trading? Did they get spanked? Did they make money? Did they lose money? M&A's got to be down. All these other things got to be down. I suspect, like many times, some of these quarters, some of these companies will produce good quarters. Others will be hurt. So it'll be interesting to watch. But the big number of the week is absolutely CPI. And when I got prepared for this show, I had to double check these numbers because these expectations are horrible. So CPI expectations for headline is down slightly, 8.2, last month 8.3. As I talked about last month, we need to stop looking at headline because of all the monkey business with oil. We need to look at core, and this is what I meant. This core number, if right, is a problem. Previous month started the crash in the stock market when core went up to 6.3, like we called and talked about. They're expecting, folks, core to go up to 6.6. If they're right, if core goes up at all, we got to be in trouble. I am shocked that they're calling 6.6 on core CPI, which again is up. I didn't check. I need to check. I think the high watermark for core was 6.5. I need to check that. I'll check that probably this evening. But yeah, folks, they're expecting core 6.6. If that's true, the Fed's got to just yank the chain. If core goes up that much, I think they put 100 basis points back on the table. Again, I'm not calling for it, but wow, 6.6. On top of that, we do get PPI, Producer Price Index, on Wednesday. August was 8.7. We'll see where that goes. And then on Friday, we get U.S. retail sales. How strong is the consumer? How strong is the consumer? Read an interesting article about one of the biggest YouTube channels, Mr. Beast. We talked about Mr. Beast about 2 or 3 weeks ago, where he was offered $1 billion for his channel and declined. Did you know that Mr. Beast spends $8 million creating content for his channel? He spends $8 million a month. Is that a month? Yeah, a month creating content for his channel. He has some crazy, crazy things. I've watched it. I'm entertained by it. Shout out, Mr. Beast. Wow, that is nuts. I don't know if you saw this. This kind of went below the radar with the jobs number and the deteriorating stock market. FedEx. Pay attention, folks. Pay attention. FedEx warned suppliers and contractors that they are expecting a weak holiday season. Now, is that weak because we bought enough cardboard boxes? Is that weak because we are doing events and services? Or is it weak because the consumer is pulling back? I know what I believe, but let's hear from all of you. Last thing we'll talk about, and then we will talk about the November 12th event. First and foremost, I read an article about the states, the 5 states with the highest increase in income, and I would have only gotten one of these 5. Think about it right now. Take a guess. Interact with me here in YouTube. I want you to guess one of the top 5 states. You don't have to guess all 5, but let's interact with the comments. Let's get the comments going in this live stream. Let's get the YouTube algorithm having more and more people watch this. So what do you think one of the top 5 states for increase in household income is for 2021? Go ahead and take a guess. I'm going to start backwards. So we'll start at number 5. Number 5, Montana, with an increase of 4.4%. Number 4, South Dakota, 4.8%. Number 3 is the only one I would have gotten right. The only one. Arizona, 5%. The next two, I don't think I would have gotten if I had 10 guesses. And these are big numbers. New Hampshire, New Hampshire up 7.1%. 7.1%. And the winner chicken dinner, Vermont at 8.5%. Yes, Vermont. I'm guessing that's New York money coming in, but I have no idea. Vermont with the largest yearly increase in household income at 8.5%. So again, we'll go top to the bottom. Vermont, New Hampshire, Arizona, South Dakota, and Montana. I would have gone 1 for 5. That is not good. Let's congratulate a couple of people before we get into the November 12th event. I want to congratulate Chase for getting your deal. Chase, I think your note said you've got 3 more in the pipeline. Congratulations. Let me know when those close. And Cam, congratulations for getting your deal. Cam and Chase, your cards will go in the mail today. So now let's talk about November 12th. I want to give you the highs and lows. So yesterday morning, or actually probably it might have been Thursday evening, we finally pulled the trigger on what was, so this is history, but I'm giving it all to you, going to be a November 12th event headlined by Pace and Jamil in Fresno, California. In that big event, I was going to have a very small portion. Myself and Dion from Dion Talk were going to be speakers. Not 24 hours, really 12 hours. 12 hours after telling folks it's on, and 61 people bought tickets, which I apologize for. We will get to that in a minute. 61 of you bought tickets. We had to cancel, or we had to postpone that event. It is still our intention to have an event with Pace and Jamil in Fresno, but unfortunately, Pace and Jamil are double booked. Their calendars were not updated correctly, so they can't come to Fresno on the 12th. That was a huge high and a huge low. I was crushed when I heard that, because frankly, I want to get to see you. I want to be in the room with you. Right? All of this virtual stuff is fine, but I want to get out, meet, take some selfies, really keep giving back in different ways. So again, announce the event, rug pull, disappointment, and then I decide to make it a one rental at a time event only. So we are going to do an event in Fresno on November 12th. It will be at a smaller venue. When you have Pace and Jamil, you go get a big show. You go get 600, 800, 1,000 seats. One rental at a time, we are going to do 200 seats only. 200 seats. That's all we got. I suspect this will sell out, nor I say I hope it does. I think it sells out in the next couple of weeks. So if you want to come to Fresno and see what we're all about, and I'm going to give you the whole agenda right now. November 12th is on. There's a new location. I will put the Eventbrite link below where you can buy tickets for $27. Yes, folks, $27 is all the tickets are. It is really going to be a one rental at a time mastermind for $27 measly dollars. So a couple of things. First and foremost, I am going to do this thing my way. What does that mean? No PowerPoint. We are not doing a PowerPoint. I am not letting the audience fall asleep. Instead, we are going to take what we do here on one rental at a time and put it in live format. What we are going to do is we're going to have a stage. We're going to have 2 or 3 chairs, depending on the topic. And we're going to do this interview style. Interview style, just like we are doing right now, this discussion, this live stream. I will have 3, 4, 5 questions teed up, and then the audience. The audience gets to ask questions. This is a mastermind. If you've ever wanted to come and talk to these amazing people and ask them a specific question, this is the event for you. So I want to let you know about who is already confirmed. These folks are already confirmed. We have Omar. Omar is coming up from Southern California. He is going to talk about going from a bartender at a family restaurant to the real estate entrepreneur who is my Tuesday expert. He's going to talk about changing markets and all of those things. If you ever wanted to be in a room with Omar, November 12th is your time. Ty, TYLG, he's my Friday expert. He is going to talk about 30 years of experience, multiple cycles. He is going to talk about the loss of focus in the last crisis that cost him big money. He's going to talk about door knocking. He's going to talk about PropStream. He's going to talk about all of these amazing things that all of us should be excited about in the coming 2 years. We will, of course, have Dion. Dion will be there. Dion is going to bring multiple copies of his binder strategy. He is going to bring his binder strategy. He is going to talk about self-management. Dion spends 2 hours a month self-managing 18 units. I don't know about you, but I want to hear about that. And of course, we will talk about his 8 to 10 year journey to financial independence. Again, if you want to talk to Dion, you will have your opportunity. Then we are going to bring Cody and Christensen, 2 guys that have been on my channel individually. We are going to bring them together. These young men are in their 20s. They have taken seller financing to the next level. They have combined portfolios that are bigger than mine. Cody, 22-year-old, now over 100 units, all seller financing. I don't know about you, but I want to ask him some questions. I want to ask him how he finds these sellers. I want to ask how a 22-year-old can get folks to lend him privately millions and millions of dollars. I want to talk about the resort. He just bought a resort, folks. I think it was a $3 million or a $3.5 million deal. I want to ask, and I'm going to use this word not to be rude, but as a sign of respect. I want to know what this kid, and I call him a kid because he's 9 years younger than my daughter, how this kid is crushing it. I don't know about you, but I'm coming to and talk to Cody and Christensen. Then we have Adrian Hernandez. He is my Wednesday guest. He's had to take a few weeks off because him and his wife just had a new addition to the family. So shout out Adrian and your wife. Congratulations. I want to talk about mindset. I want to talk about how you strengthen, how you monitor. I believe I have a lot of One Rental at a Time fans over the last 2 years because the times have been good. My job and Adrian's job is going to be to help you understand how your mindset is your tool to deflect negativity, how to strengthen doing the work. We are not guaranteeing deals. We are going to go out and do all of these things. What is this chat bot? I just see it over here. Sorry, I wasn't paying attention. How do I do this? No, hide user on this channel. There you go. User is hidden. Sorry about that. Chatbots. What are you going to do? So Adrian is going to strengthen your mental fortitude and mine. Then we have Beth. I don't know about you, but if you are in the real estate business, how would you like to talk to a top 1% national agent? And, oh, by the way, an investor. And, oh, by the way, someone who is closing seller finance deals. I can't wait to ask Beth a bunch of questions, and I hope you do as well. And then finally, Brian Lebo, Mr. Las Vegas. Brian and I talked yesterday. We talked about Las Vegas. We're going to talk about Las Vegas market, the 2008 crash, the similarities. And again, some of you are in markets that are bubbly. So Brian and I are going to talk about our experience with the 2008 crash, what happened, what didn't, what's happening now, what's different. It is going to be an amazing event. So again, all of these people are currently confirmed. I am trying to add some more super secret special folks. This event is going to be One Rental at a Time only. Tickets are $27. Any profit that's made on this, which I don't think there will be any, but if there is, I will, of course, donate. But this is an event that I am looking forward to meeting you. Again, 200 people only. 200 people only. Again, excited, depressed, and now I am more and more excited. So I hope to see you there. Take lots of selfies. Bring your books. I'd love to autograph your books if you have them. And yeah, I will put the link below so you can register if you would like. If you are part of the 61 folks that bought a ticket, you have a choice. You can keep the ticket for the PACE event, which we are actively trying to reschedule. You will be good. 2, if you want to exchange it from the PACE event to mine, you've already paid. I'm sure we can figure that out. And 3, if you'd like to buy an event ticket to my One Rental at a Time and keep your PACE event because you'll go to that too, that is awesome. In the end, I will make sure you are whole, even if I have to reach in my own pocket. I don't want anybody in my world or my ecosystem to be hurt by a scheduling snafu. So, all right, folks, I'm excited. I've never done an event. I hope to see you there November 12th, One Rental at a Time. Now, remember what's happening next. 8 a.m., we are going to do probably 45 minutes of live Q&A because at 9 a.m., we are going to do my would-be Bigger Pockets deep dive. I created a presentation that if I was invited to the One Rental at a Time event, this is what I would have given. So I sent it out to all of my students, both the free course and the paid course. Everyone got it. This event went out to over 4,000 people. So we will see who's there. And then, of course, just like always, I will post this 9 a.m. tomorrow for all to consume. So have a wonderful day. Take care of yourself. Have an amazing day. And I hope to see you at the November 12th event. Bye-bye.